All right, guys, good evening. Um, Today I just want to share some trade ideas with you guys. Okay, I saw some exciting, interesting setup with Swiss yen. Okay, this Swiss franc Japanese yen. Okay, and it really amazed me. So I just thought I should just do a video to just discuss this, structure, this market with you guys. Okay, now if you look at this market, you see that okay, let's just start from the weekly time frame. Okay, let's start from the weekly time frame. You will see that this market has been progressively uptrending for a very long time. Let me just zoom in on this chart. Let me zoom out. Sorry, let me zoom out on this chart so that you see what I'm saying. You can see, you know, progressively this this instrument has been in an uptrend. Okay, it broke out of a range here and entered an uptrend, pulled back, went up, pulled back, went up, and progressively it is going up. So you can confidently say that this market has been buying for a very, very long time. So it's not going to be an idea, it's not going to be a bad idea for you to position for a buy trade in this market. Okay. Now the reason why you have to be careful about it is that so that while this uptrend subsists, okay, while it endures, you can at least catch some move to the upside, okay, and make some pips, okay. So what I think we can do as smart traders is that we just look at this market from the weekly time frame to determine the market structure. Then we drop down to the daily time frame to see also what this market is doing. Now, this gives us an idea that we should we should experience and confirm what this market has been doing for a very long time. Guys, I want to share something. Let me show you an interesting characteristics of this market. Okay. Now, progressively, this market has been breaking structure. Let me show you guys. Progressively, this is a structure broken. This is a structure that has been broken. Okay. All right. This is another structure that has been broken. Okay. So progressively, you see this. There's another structure up here, guys, that has been broken as well. Yeah, because the candlesticks have closed. You know, the candlesticks. Okay, now this structure is yet to be broken, as it were, because the price has not really broken this level, okay, of price action. Now we have to wait for this candlestick to close. If this candlestick closes above this level, above this trend line, okay, above this line, then you know that this market has indeed decided to be progressively, you know, uptrending. Okay, so guys, that's what we're going to do. We're going to wait for now. If that happens, okay, if there's a break of structure here, now it's important to wait for market to pull back to key levels. It's important for us to wait for market to do what? To pull back to key levels. Okay, let me show you what I mean. Now, for me, I can use a trend line, to trade this market. Okay, I don't know, some other traders may think otherwise, but I can use a trend line, to develop structure part for this instrument. Okay, now you see, I want to wait to see price pull back to structure, this trend line structure. Then I look for what? I look for a buy opportunity, guys. Okay, that's if you have to trade off the daily time frame. If you decide to trade off the weekly 4 hour time frame, you can also drop down to the 4 hour time frame to look for an opportunity. But guys, you know me, I'm a swing trader. I prefer to trade off the daily time frame. It gives me a lot of peace of mind. Okay, it gives me a lot of peace of mind. So let me just open this moving average, guys. Let me just open this moving average on this chart. All right, this is my, let me see, what period moving average is this? This is my 50 period moving average. Good. This is my 50 period moving average. I love this moving average. It helps me a lot to to show what this market is really up to. When it comes to pullbacks into structure, and I look for opportunity to buy. This market is buyer's market, guys. The market is buyer's market. Wait for opportunity to buy, then you pull the trigger. And when you pull the trigger on this instrument that has been trending in this manner for a very long time, make sure you use one standard lot size, half standard lot size, okay, to just enter this market and secure yourself with tight stop loss, okay? Tight stop loss. So if you ask me, guys, there's a lot of potential in this market to the upside. So I'll continue to observe what this market is going to do, and see if there's any opportunity to to buy. Okay, any opportunity to buy. But another thing, interesting concept I want to teach us here is that there is one phenomenon that if you notice here, you'll see that the market will rally, the market will rally, form a base, rally, form a base, and rally. Okay, so I'll wait for another base candles to form, then I will take a buy. Guys, you need to understand how to trade this strategy. It's an advanced strategy. It's not for beginners. So if you notice what is happening here, the market, for when it pulls up, it pulls back gradually, with about 2 to 3 candles. Go up, pull back with about 2 to 3, 4 candles. Okay? Pull back, okay? And continue up. Consistently, it has been doing that, apart from this structure part, this pullback, this retracement that is a little bit deep. The other retracements have been what? Minor retracements. Minor retracements, okay? Minor retracements, and the impulsive move will continue, guys. So that's what I want to show us here. Okay, the other thing we can do is this. Let's remove all these indicators. Sorry, let's remove all these drawings, okay? Now, the other thing we can do, let me close this moving average, is that we can drop down to the 4-hour time frame. Now, if you drop down to the 4-hour time frame, you might see an opportunity to treat this instrument from another perspective, okay? From another perspective, guys. So if you look at it, there isn't much change in price action. There isn't much change, guys. So it still remains what we're looking at. We're looking for an opportunity to buy this instrument, okay? So, guys, what do we do? This candlestick must close for us to, for us to take any further action in this market. Guys, if you ask me, I'll continue to look for buy opportunity in this market. Okay. So let me see what these moving averages can give us. Let me try the let me try the 21 moving average. Let me change this to 21 period moving average and see what we have. Okay. Let's change this to 21 period moving average. Okay. All right. So now 21 simple moving average is about okay for this trade. Okay, you can see that what is happening here is that the market price has found some level of support here, and is actually bouncing off that support. And if you look at history, you see that price reacts off this moving average. At some point, it will pull back and hunt stops. Okay, but when you hunt stops, it's not the end of the trade. You look for another entry opportunity and enter the market again. See that the fact that price hits your stop loss does not mean that you should forgo that trade. No, look for another entry opportunity. It could be smart money that has come to hunt your stops. Okay, so if, for instance, this trade had taken, if we had taken this trade based on some criteria, okay, if we had taken this trade based on some criteria, perhaps, okay, let's say we took a buy here, okay. Of course, if we took this buy, okay, this is where my natural stop loss will be, because I'll be looking at these two candlesticks, okay? Now, these two candlesticks gives me what? They give me bullish engulfing candlestick pattern, okay? So I will trade this and put my stop loss somewhere here, okay? All right? Now, let's look at this other opportunity here, the price pulled back. So when price pulled back here, okay, and it's going back above the moving average, I'll wait to see a candlestick pattern on the moving average curve. Okay. Now, These two price actions, these two candlestick pattern is what is your bullish engulfing. It's your bullish engulfing. Okay. So I will take a buy at the close of this candlestick or at the close of the second candlestick after the pattern. Okay. And perhaps put my stop loss somewhere here. All right. So for that to have happened, I would have still remained in this trade. This market has not really gone far. Okay. If I want to take this trade, I'll put a stop loss here. Okay. And let me show you what I mean. Let me show you what I mean, guys. What trade is this? This is a long trade? Fine. I will do this. My stop loss will be somewhere here. Okay. All right. So if that's my stop loss will be, my entry will be somewhere around here. My entry will be somewhere up here. Just a minute. Stop loss here. Entry here. Then all right. Take profit somewhere here. So let's look at what would have come out of this trade. Okay. So stop loss here. Okay. Entry up here. Okay, let's say I entered here. Okay, if the price moves up slightly, let's say I want to put a pending order. Okay, for the next trading week. Okay, I could put my stop loss here. All right, put my stop loss here and target what? Maybe a 1 to 1. Okay, I could target a 1 to 1. Not bad for the initial stop loss. Okay, target a 1 to 1. That is a 1 to 1. Okay, all right. Then I want to duplicate this, clone this. Okay, if I target a 1 to 1, put another take profit. Okay, I'll target here, TP2. Okay, so I want to increase the shading, the opacity for my take profit too. Okay, so this would be my TP1, TP2. Okay, so let me just put it accordingly. So what I have here is this TP what? TP1. Okay, to be my TP1. So I'm going to clone this. So this is my TP1. Okay, then this will be my TP2. All right, TP2. Okay, guys. All right. So this will be my trade setup for this particular for Swiss franc, Swiss franc, Japanese yen. Okay. So guys, let's leave this here for today and see what this market will play out. See what how this market will play out, and then we'll take it off from there in the coming week. Okay. So guys, thank you very much. I hope you enjoyed this trade analysis. So till we see again, bye bye and have a lovely weekend. Thanks.